Good evening, everybody. Kind of a easy market to analyze in the sense that we can obviously see the downtrend in the Dow. And the obvious uptrend in the NASDAQ coming off this J-hook pattern. So this makes it relatively simple to analyze the fact that there's going to be some sectors that are going to trade positive, other sectors that are going to trade lower. So we've still got crude oil working in a very steady uptrend. I haven't even taken a look at the oil stocks. No, they're not doing much of anything. So I'm going to just delve into what we want to be talking about tonight, which is there's a heck of a lot of good J-hook bobble patterns out there right now. So there are going to be times when we talk about that it's time to buy the oil, sometimes it's time to buy the techs, sometimes the trucking companies, but right now it's time to buy the patterns. So here's a bunch of good, what I would call bobble breakout type patterns. F-SLY. You can see that if this opens positive tomorrow, your next likely target could be the 200-day moving average. We recommended eyes today because this is kind of your convergence analysis. Look at your fry pan bottom. Big fry pan bottom, bobble breakout on eyes. Just a high probability expected result that it's going to trade higher. AFRM was also recommended. This is just simply observe the obvious. If we know the classic pattern works very effectively, and we can see the bobble breakout starting the J-hook portion of the classic pattern, and we can see that the T-line acted as support, and they gapped up out of the resistance level of the 50. That made for very easy expectation we were heading higher. And it's not done yet. If this opens positive tomorrow, there's your doji sandwich confirmation. So the reason I always go after the patterns is because, first of all, they're very easy to identify. They're very high probability results based upon the trend movement, and then on top of that, usually that price move is going to be fairly substantial, much more substantial than just merely an uptrending stock. So still like VSTM, ever since the fry pan bottom breakout, then kind of another little fry pan bottom breakout. Now it's up here in the overbought area and did a shooting star, so you might get ready to take some profits. However, if it opens positive, how come this chart does this? I got to change charts because that thing, whoops, enough to drive you to drink. See if I can do this correctly. A little bit more. All right. So VSTM, that's not what I want. You have kind of a, obviously, fry pan bottom breakout, but you also have a gap up. So you have, this is where you take all yeah, so that would be a good place to put your stop, is at today's open. Bingo is setting up as a J-hook type pattern. Make this a little bit smaller. Right now, I think it's trading up a little after hours. So there's your inverted hammer Harami. This one can still be bought on positive trading. Anytime you see a pattern, this I would consider a cradle pattern, with the observation or the obvious being that they did it right smack dab on the 200. It's also got kind of the elements of a scoop pattern. That makes this a high probability expectation. CEIX, when it broke out, did the double doji right now in the 45 degree. These are the simple ones that you like to get into, knowing that as long as it stays above the T-line, your analysis is about 2 seconds each night. Meaning, as soon as you click on this and you see that it's just still no sell signal trading above the T-line, you move on to the next one. EOLS. There's your classic pattern. Fry pan bottom, J-hook pattern, and this is again where the T-line is much more indicative of what's happening to investor sentiment. You can see that it's actually supporting on the T-line. You know there's a higher degree of probability they're not selling this one off, or any chart that is using the T-line as support. So here's one that also had kind of your cradle pattern. How long do you stay long on this? As long as it doesn't close below the T-line. Tigger kind of back and filled today, but closed, well, flat. But there was a little element of a J-hook pattern right here. And the reason we were, oh, pshaw. Well, the type doesn't like to make the same mistake 7 times. I thought it was a kind of a breakout. Yeah, support right there. That one has still got more upside. No. Especially if it opens positive tomorrow. I will tell you, wave 1, wave 2, going into wave 3. Lending Club, get ready to buy this J-hook pattern that comes up through this level. So you can see kind of the cradle type pattern, not a real good cradle, but at least telling you that they reversed it back up above the T-line, supporting on the T-line. Now if it breaks through this level, got a J-hook type pattern more to the upside. Now SENS has been working well. However, notice what it did today. Let me see if there was a level. Not really. But we're up here in the overbought area. It opened positive, but then closed as a bearish left-right combo. So this allows you to be ready for what your trading strategy will be the next day. To stay long, it better open positive and trade positive. If it opens lower and starts trading lower, it's probably coming back to this level. Not ending your uptrend, but telling you right now on this basis, you probably want to come out and wait to see what happens back at the T-line. And There's your bobble breakout on BLI, consolidated today, so it didn't change your direction trend. You stay long on this, and you probably still use the T-line as your stop, which will be up higher tomorrow. Now on the short side, we've gone short on KC because of the best friend gap down. It traded up above this level. So instead of closing out the whole position, basically closed out half the position to see what it would do by the end of the day, which in this case it came back. Now the reason you probably want to close out half versus all of it is look where your stochastics are. They weren't anywhere close to being oversold, and you still had this down force from that very best friend. So I wanted to see what it does at the end of the day. If it had closed up here, it would probably closed out the other half of position. The fact that it came down here now tells us if they open this lower, it's still using this force to the downside. Add the other half back again. LPX. Just look at your double dojis, still in a downtrend, getting to the oversold area. So short on this position, but we already have a built-in strategy. We're in the oversold area, we're seeing a doji, so where's the logical place to put a stop? Above the high of the doji. Because logic says if they start coming back up from the oversold area, that was the reversal, close out the short position. Now AI closed out this position yesterday because of the bullish harami getting to the into the oversold area. But look what happened today. It failed at the 50 and the T-line. If this opens lower, we'll reshort it. Especially if it starts trading, especially if it trades down through this level. But just watching the market will give you a clue as what's happening. If the market, especially the Dow, opens lower, and this is opening lower, probably want to reshort it because of this force of that bearish flutter kicker signal. That was AI. All right, as far as the biggies, NVIDIA, there's your obvious J-hook pattern. Apple finally picked up a little bit of steam. Kind of a J-hook bobble breakout now. It was lethargic most of the day, and then they apparently started buying going into the close. Netflix, also viable, but would watch to see if they can get it back up here to the moving averages, the 50 and the 200. Tesla, nothing wildly exciting there yet. Even though it traded positive today, on a relative basis, it wasn't really all that big a day. Now, if they open positive and start coming up through the 34, that'd further kind of confirm the uptrend. Then you can start thinking about buying. And Amazon, you can see the pattern for the signals here. There's your best friend breakout above the T-line. There's your doji sandwich that took you through the 50, and there's another bullish doji sandwich implying there's going to be more upside. So just adding all this together, knowing that a best friend is strong, a doji sandwich is strong, a doji sandwich is strong, you're just climbing into the overbought area, but the implication with that strength is that there's going to be more upside. Which one? Tigger. That wasn't it. Which one was it? I'm going to get it. No. No, I can't figure it out. It's getting closer. It's not Tigger. I'll come across it. I don't know why I don't have it on the list here. There's another one. What was the one that did a bullish flutter kicker signal? And then another gap up. How to use doji sandwich stochastics overbought. You're a little bit more cautious when you're seeing doji sandwiches in the overbought area, but your first inclination is that there's still more upside. But you always keep in mind that you're overbought, so you're going to be a little bit more attentive as far as seeing any reversal signals. That's just a fine howdy do. Okay, so again, sometimes you're buying the oils, sometimes you're buying the high techs, sometimes you're buying the shipping companies. But then there's times where you're buying the patterns. And the patterns right now that seem to be working extremely well is the J-hook pattern in stem, which closed just above the high. Now you can see where you had wave 1, J-hook pattern, wave 3. And how did we know wave 3 was coming to an end? Well, wave 3 was about the same magnitude as wave 1, number one. Number two, they gapped up and did a doji. What's the first thing you should be thinking if you see that type of signal or that type of move? Where do they buy? They buy exuberantly at the top, get ready to start taking profits. Oh, I don't know whether that's not what I would call a J-hook pattern, because you're still trading. Yeah, it's still kind of ugly. Yeah, we got some of those. I don't think it was AF or M. Well, for crying out loud, hold on. Let me, oops, no, I don't even have my, when we had this micro burst yesterday, knocked out all the power. Nice sunny day today with a mild rain here and there, but they turned the power off again, so I have to reboot, or did rebooted by automatically rebooted because they shut the power off. FTCH. There's your, observe the obvious. Bullish Harami, bullish confirmation off the 50, J-hook pattern. So when you can recognize these patterns, and then you can add additional factors of why they're buying right here or buying off the 50, just gives you that much better probabilities that you're in the right place at the right time. Here's Taiwan semiconductors. Look at your doji sandwich. Looks almost bullish Harami, doji sandwich breaking out through this level. Wave 1, wave 3 is in progress. Yeah, Jim, that's probably true. CLSK, same scenario. Let's get rid of that line. Look where your J-hook pattern formed, right smack dab off the 50. Wave 1, wave 3 in progress. Is that a... No. How come I can't even read my own handwriting? Oh, it may have been something like E-E-L-O. Another J-hook pattern. Now, somebody was asking the other night, how far back do you use your charts? And usually I want to have it big enough where I can see what's going on here. But if I can see there's a J-hook pattern right here, maybe I'll just take a couple ticks and see if there is something, well, for crying out loud, something over here. Oh, yeah, there was kind of a peak at this level. So I can go back to see if there was a previous support or resistance level. But there's a J-hook pattern breaking out into new territory. KOPN. Observe the obvious. Support right smack dab off the 50. There's your classic pattern. Wave 3 should bring you back up and test in this area. We did this one. This one's very simple. If this opens positive tomorrow doing a doji sandwich, wave 3 is in progress, probably up somewhere in this range. So if you can identify, and these are very easy to identify right now in these market conditions, but there's a heck of a lot of good J-hook patterns setting up. There's absolutely no reason why, if you have 10 positions on, 6 of them aren't J-hook patterns, because they're going to give you the high probabilities. Not the high probabilities because of just witnessing a J-hook pattern, because we know a J-hook pattern is the process of investor sentiment taking profits and then continuing the uptrend. That there's an extremely high probability we're going to see more upside on these. BEEM, right smack dab off the moving averages at the T-line, bullish harami, look for wave 3. So right now, I've got probably 3 or 4 positions on that are J-hook pattern oriented. And the one I went after pretty hard today was AFRM, because you can see the J-hook bobble breakout. I would suspect they could bring this back up at least into this area. DJ, don't know. I'm not even looking at sectors now in these market conditions. I'm looking at the J-hooks. So it's pretty easy to assess that if I've got 4 J-hooks in the biotech area, I probably want to be buying the biotechs. This one was an example of, look where your J-hook pattern occurred, kind of a bobble breakout. These are the expected results. And the reason that a bobble breakout is much more potent than just a J-hook pattern is because everybody is watching. I mean, we're watching the J-hook pattern, and we can see that it's supporting at the T-line. But everybody else that doesn't have the T-line on their chart, they're watching to see what's happening at the major moving averages. Yeah, cryptos were strong today. I'll swing to those real quick. You can see how Riot came right up to the 50, and Mara also touched the 50, but stochastic's coming up. Still watch to see if there's more upside. Coin actually gapped up. Best friend signal gapped up. I would think you're going to see some more upside. That's right. Until Musk makes another comment. There's a J-hook pattern again on wrap. Look where the breakout occurred. There's your fry pan bottom J-hook type pattern, and bam, they took it up through there. Now that was obvious to a lot of people because of the 200. It's not so obvious to a lot of people because they don't have the T-line on their chart. When we can start adding pieces of information like a hammer, bullish engulfing, and they start bringing it back up with the added visual that they aren't able to close it below the T-line, that tells us wave 1 wave 3s in progress. And again, we can see that it's not just a slow meandering uptrend. These are going to usually produce the same magnitude movement from here, same trajectory from here. So a lot better, I guess a better way to say it is, got a lot more opportunity to make hay while the sun shines when you're using a pattern. This is SLS. This is slug. Very obvious. Fry pan bottom. Classic J-hook pattern supporting right smack dab off the 50. That might be recommended tomorrow. So the fry pan bottoms are working extremely well. And this is where we're going to be kind of concentrating, what is it, 2 weekends from now on the 26th, of where is the likely breakout of a fry pan bottom going to occur. Probably right at the area that you can see has been acting as a resistance level. Which was also what happened today on this one. So why would you be buying a stock that's skyrocketing in the overbought area? Because you can see it just broke out of a fry pan bottom with a best friend gap up. What's the likelihood of a fry pan bottom? More upside. So once again, would you be buying here or buying here or buying here? This is where you flip to your 10-minute chart. Say, up, I could be buying. I might even be buying here. I wouldn't be buying here. Don't know where they're taking it. Whoops, they're buying it back. They didn't go below the T line. Buying it back here. Could be buying it here, buying it here. Wouldn't be buying in here. Now they took it up right near the close. Now, I think it's trading a little bit lower, but this is the type of setup where we could wake up tomorrow and they open it here and start it right back up again. Oh, there was okay. Investor sentiment building back up. Where would you think the first target would likely be? Probably right here, which would be coinciding with filling that gap. So anything we can visually recognize as being a target that other people are watching, we can see what's happening when it gets to that level. OSS. Where'd this fry pan bottom support? Right smack dab off the 50. If it starts trading positive from here, where's your next target? Right back up in this area. So it's easy to recognize the patterns, and as long as you know what to expect after a pattern, there's your message on CRSR. So if you learn the message, meaning you see a doji and then or they start taking it back up, remember what the message is. Even though that's an ugly looking chart or ugly looking trading day, the message was they gapped this thing up huge and then there was profit taking. So what are we looking for? We're looking for that profit taking to end and then the results of that gap up going back into effect. ENOB, same scenario. Now there's a difference between a bearish belt hold and a message. A bearish belt hold would have come right back down into the trading range. Not good. The message is they don't come all the way back down. What was the pattern on OSS? Kind of a fry pan bottom. Two curves were there. I don't know what that means. You can see what's happening right here. All right, so when you see a breakout, what do you want to use as far as determining whether to get into that breakout? Well, look what happened here. Slow curve, gap up doji. What's our doji rule? It's going to move in the direction how they open after a doji. When they opened and traded this positive, what did that tell us about this indecisive day? That was the profit taking. Now, whatever that force was that gapped this price up is now going into a 45-degree. Can we enter a trade after a McMuffin has been made? Because by that time, stochastics would have reached, not really. Now, usually with a McMuffin, you're not in the overbought condition. I'm trying to think of which, can't think of a McMuffin. But most of the time, yeah, you won't be already up in the overbought area. Somewhere way back. There's your McMuffin. You're still in this range. And that's the last one I can remember. MSTR. Kind of a, well, not kind of, little morning star signal. Doji right smack dab off the 200. Doji best friend gap up. So when you start seeing the strength of these signals, the implication is there's going to be more upside. No, that the message there was if you had bought it on this day, with the bulls telling you they took control from this point, where was the place to put your stop? Back at where it opened the previous day, because logic says if they can come back down through there, through the point where the bulls were showing they were taking control, who's back in control? The bears. You close it out there. So that's, yeah, that's kind of a now turned into a nothing chart, because at best maybe you're still in this trajectory, which isn't all that powerful. Bit mining limited. That one you could be buying. First target, second target, and we did Riot and Mara. And Jill was a good example of patterns. Look at your kind of your fry pan bottom breakout. Look at your J-hook pattern. Look at the fact that they did inverted hammers, bullish confirmation. So once you understand or once you recognize the patterns, you know what direction you should be going. You know when profit taking is over based upon individual candlestick signals. And if those individual candlestick signals are showing support, you can pretty much calculate where your next next price move is, or your J-hook pattern. All right, good to have you back, Jace. All right, so not only do you have good long positions, somebody was asking today whether they could be shorting Caterpillar. Could we short it here? Well, here's where you try not to be the, what is that, FOMO, fear of missing out. If you're asking whether you should be shorting a stock that's already had a huge move, what you should be doing, what you should be doing is analyzing where should you have been shorting before this big move. Let's make this even bigger. There's kind of a evening star signal closed below the T line. What was another relevant factor at this point? Look where it kind of topped out. There was a resistance level. Stochastics rolling over, followed by a bearish doji sandwich. What do we know about a bearish doji sandwich? There's going to be more upside or more downside. What's that tell us about the 50? If they start trading below the 50, you stay short because the 50 is not acting as support. I don't know. There it is down there. So that could be your next likely target. However, this would be a case where if I was short, I'd stay short. You're in the oversold area. You're seeing a doji. Where's the logical place to put a stop? At the high of the doji. If it opens lower, you're still good. Still heading down. Same thing with deer. Should you be shorting it here? Probably not, because you're down here in the oversold area. I say probably not. You still have kind of a dumpling top. But there was your bearish left-right combo that told you whatever. And notice right here, where they gapped it down, what was the nature of the bullish sentiment taking it back up to the T-line? Very indecisive. You can see there was no strong movement. It was all indecisive. And then when it got back up to the T-line, there was your bearish left-right combo. That would have told me, yep, I could start shorting this on weakness again. But I would have been shorting it somewhere up here versus here. So I'm trying to find something that would look more like this, where we've got kind of that bearish harami closed below the T-line, kind of a bearish double doji. I'd rather be shorting something like this, where we still have a lot of downside left in the stochastics, where we can at least see that the 50 would be the first target. So if the worst case scenario was that that we bounced up off the 50, at least we had a little bit of profit in our short position. Ride. Big reversal. Big bearish engulfing with a booster. Now you have a gap down. So if this opened lower tomorrow, what would you have going on? A bearish flutter kicker signal. Which direction has this stock been going? Downtrend. Tried to bring it back up. They're back below the 50, the T-line. A very viable short on weakness tomorrow. A booster is the fact that they took it up and took it back down, kind of like a little booster rocket to the downside. There's your bearish doji sandwich. Stochastic still got a ways to go. What would be the implication here? There's more downside, possibly all the way down here. Now, what's the nice thing about the T-line? You can stay long as it doesn't close below the T-line. And when you see that with a big sell signal that closed below the T-line, that pretty much tells you there's been a major change of investor sentiment. And where would have been a likely place to have your stop? Just below the T-line. It shouldn't move in that direction. It's also this is why I tell people to occasionally go back and read through all the signals. Notice what they did here. This is called two dark crows. Notice they opened here, closed here, bearish. Then they opened right back at the same level and started selling it off again. That's more bearish. That's called a two dark crow signal. Playboy had a run. But you can see when they were trying to get out. There's your shooting star gap down, followed by a bearish doji sandwich. I wouldn't be afraid to be shorting this one on weakness tomorrow. Observe the obvious. Where did they fail? They opened right here at the 50 and immediately started trading off. Kind of a hanging man signal, gap down. That tells you they're trying to get out of this one with great enthusiasm. And Vuzi, you can see the bearish engulfing, closed below the T-line. Where do you think the next likely target could be? Right down here. And if you were shorting this, where was your stop? You don't want to see it close back up above the T-line. Oops. I'm going to read my own handwriting. There's your evening star signal. Didn't confirm. Indecision, indecision, bearish left-right combo. This is just common sense analysis. If this is a major reversal signal, telling you the bears are trying to take control, but it didn't confirm, then they weren't very decisive at the same level, and did a bearish left-right combo, what can you easily assess from this combination? A major sell signal, couldn't really take it back up, another sell signal, and what do we know about the bearish left-right combo? You don't really even need confirmation to go short, because the probabilities are extremely strong that that left-right combo was an indication there's going to be a lot more downside. We also had been long PCT until it failed here at the 50. Now you've got another bearish engulfing. You could short this one with the first target being the 200. If they go through there, you can see you're still in a downtrend. They could be bringing it all the way back down. So still lots of very good buy setups, as well as some good short setups when the markets themselves, or the market in general, is telling you there's one sector, such as the NASDAQ stocks heading up and the others kind of heading down. So I would still be an aggressive buyer on AFRM. If it does a positive open tomorrow, doing a doji sandwich, bobble breakout, classic pattern, I would suspect they're heading back up into this area. So that's about all I got for tonight. Are there any general questions on candlesticks? Let's see. On STEM, both have a bearish engulfing candles at the top that your charts have. So I closed out the trade, but, well, if this is the one you're referring to, yes, I would have had a safety stop just below the low of the doji. But this is the exact reason, Jimmy, to have your T-line on here. Because as soon as you saw it was indecision, indecision, and they started back up, what did that immediately tell you about the T-line? It's acting as support. Now, did you get out over here somewhere? you haven't really missed getting back in. What the other it doesn't really matter, James, whether you want to count it from here or from here. Is this a left-right combo? That, yes, but you wouldn't really consider it a left-right combo in the sense that you're still above the T-line. So when this opened and started trading lower after gapping up, remember what our basic rule is about enthusiasm, or the Japanese rice traders tell us. Where do most people buy? They buy enthusiastically at the top. So when we see a gap up doji in the overbought area, that far away from the T-line, what should we be prepared for immediately? Getting ready to take profits. So if you closed out over here, you're not missing anything. I mean, you wouldn't have necessarily bought on this day until you started seeing it was closing above here. I'd be more apt to be buying this one on positive trading tomorrow. I don't know what everybody else's charts would look like because I don't have anything that's different. TradingView has a big green candle bar instead of a doji on the 7th. So, let's take a gander over here. Yep, and this one also has the big green candle. So in this case, the other spot you would have had your stop, if your chart looked like this, would have been at the previous day's open. So I don't have the answer. This is why I always have more than one charting service, because sometimes the feeds get screwed up somehow. But worst case scenario, whether this was a big green candle or not, this is where you would have stopped out, and this is your J-hook pattern. So that's all right. So if that's the case, this was a big green candle in the overbought area. Your safety stop still would have been at the previous day's open. All right. I guess with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Mavis, you can see what's happening here. Came up in the overbought area. You're looking like you're at a breakout level, but you're seeing indecision. If this opens lower tomorrow, I'd close it out, because that's telling you they failed up here. It's not a breakout. To stay, it better open positive and show some good strength. Facebook, just a slow uptrend. If you like it, you can stay long as it stays above the T line. BTX, nothing there. Still flat. I'd be someplace else. There's nothing to show the bull's taking control. There's your best friend gap up. And you're sitting right here at the 200. Stochastic's not near the overbought area yet, which means if this opens positive, look for him to come up here and test this level and then get into the gap. No, on STEM, remember, this is why you have your calculation of how far can this go. You're just seeing it break out through the top. or the J-hook confirmation. Well, if you come here and say 17 to 35, 18 points, 18 points, whether you want to measure it from here or here, doesn't really matter. Say approximately 18 points takes you up into the 51 or 52 area. That's the potential. Will it get there? What's the most important aspect of candlestick analysis? A sell signal. So the pattern looks like it could take you up, so you got good percentage prospects, but you watch to see what the signals tell you. You stay long until you see a sell signal. Blink, also a J-hook type pattern setup. Didn't break out today, but still wouldn't be too concerned about buying this one on positive trading tomorrow. AFMD, nothing to get real excited about here. Short now, reversed. Yeah, so if I was short, you could see how it was starting to level out here in the oversold area. I would have closed it out today and gone on to something better. CODX. It's having a hard time getting through this level. And it's gone flat on stochastics. If this opens lower tomorrow, I'd close it out and move on to something else. And MDM, a J-hook potential, but you need to see positive trading. Bingo was actually trading up a little bit after hours. Another one you could be buying on positive trading. J-hook pattern. AMD, nothing. Would not be long or short this one. It's just not going anywhere. And Micron, kind of the same scenario. I'd be someplace else on both of those. SRNE, your gap up doji. So you know this is a very simple trade setup. If you're long, you stay long, but it has to open positive and trade positive. If it opens positive and trades positive, you set your stop at the doji, because if it comes back down through there, it's doing another shooting star type signal. AX or ASX, ASXC, J-hook pattern, kind of your classic pattern, supported right on the T-line. You could still be buying this one on strength. Yeah, there may have been that, yeah. But usually, if they have a data feed interruption, they'll eventually correct it. Live, bearish engulfing, almost a bearish engulfing. So it's a dark cloud, followed by a doji sandwich, followed by confirmation of below the T-line. First target, second target, third target. And Microsoft, there's your morning star type signal, your best friend gap up. You stay long until you see a sell signal. We did bingo. Zoom. Just stay long. Kind of see what it did today. It traded positive today. Opened lower, traded positive. Notice it's staying above the 3T line, let alone staying above the T line. Adobe had a nice up day. Broke out through this level. Another one where you stay long, but you had a little gap up. So keep your safety stop right there. That little gap up should be a warning that maybe it's starting to be exuberance. Ford, I don't know whether I would short it. I wouldn't be long. I probably just wouldn't short it because they've got that's got the prospect of a classic pattern. So Jason, no, I wouldn't. There's probably too much. What do I say? Electric vehicle favorable indication with Ford to want to short it at these levels. IQ, you can stay long, kind of a fry pan bottom. Sava, Nothing to make you nervous. You don't have a sell signal. You use the 3T line as support. You're coming off a best friend signal J-hook pattern. It's just a down day and an uptrend. Can, not anything great. Now you do have a morning star signal. Still not a great looking chart. It needs to break out of this whole area. Matador, bearish left-right combo, still would not be long or short this one. And CP, CPE, you got a bearish engulf and a bearish left-right combo, stochastics heading down. You shouldn't be in this one. There's your message. Start watching to see when the profit taking's over. NIO, you just stay long, a little J-hook type pattern, morning star signal. And SPR, that one you get ready to buy if it trades positive. Here's your fry pan bottom, trying to break out of a bobble breakout situation. Another slow fry pan bottom, slow curve, best friend, doji sandwich potential. You could buy this one on positive trading tomorrow. Nothing on this one. That's just not a good looking chart right now. There's no direction to it. And VERX. Uh-oh. Why am I doing that? Another one I wouldn't be long or short. Yeah, I probably wouldn't pay attention to this until they can get through the 50. I mean, you got this resistance level and the 50 to contend with. You need to see some good strength from here. ELOX, same scenario. If you're long, you can stay long, but I wouldn't be a buyer until it gets through the 50. ET would have closed this one out today because of the dark cloud or bearish engulfing signal in the overbought area. So here's another one where if you calculate this as wave 1, wave 2, wave 3, getting to be about the same magnitude as wave 1, probably at least profit taking back to the T-line. Edwin, the blue is the 50-day simple moving average. The red is the 200-day simple moving average. And the reason they're on the chart is because every major money manager around the world uses those to make their decisions. We're just able to see what their decisions are at those levels. The 34 is an exponential. The T-line is an 8 exponential. And then you've got the little 3T line, which is a 3 exponential. And AMAT, nothing. Probably wouldn't pay attention to this one until it breaks up through this level. Just not a chart that's moving. Zoom is down after hours. All right, I would suspect they could possibly come back and test the T-line area. And Tesla, nothing yet. Boy, yeah, I probably wouldn't pay attention until they can close above the 34 anyways, so they can get to the 50. And BCRX should have been out of this one today. Indecision, shooting stars, spinning top, bearish confirmation, and a close below the T-line. Stochastics heading down. What's that tell you about your pressure? The sellers are putting on more pressure. I don't know And I probably don't care because that's a spike there. I'd be more apt to be trading this based upon the J-hook type pattern here. But now, this move and this move are getting pretty close to the same, and you've gapped up doing kind of a shooting star in the overbought area. So where's the logical place to put your stop? Below today's open. And SOXL, getting ready for wave 3. Good bullish chart. I think we did G-Box. Yes, we did this one. Has a good J-hook setup. J on K, this one you definitely want to see it open and trade positive tomorrow. If it opens lower, they're coming back probably to test the T-line. So I would probably close out the position and wait to see what it does at the T-line. But even if it comes back and tests the T-line, then you have to ask yourself, is this the best place to have my money, or is there charts out there that look like this that have a much better upside potential? CRSR is the message, which means if you stayed long, it needs to start seeing some buying. If you're thinking of going long, you want to see that the selling has stopped. I don't know. Is this different? No, I think this was the same on. No, it's a dark candle. We did bingo. Bingo you can buy on positive trading tomorrow. Look at your inverted hammer Harami. It's trading positive. Remember, anytime you see an inverted hammer and they start trading positive, you got an extremely high probability that it's going to go positive from here. Box, nothing wildly exciting until they can break out to the upside. So you still need to see a good strong candle. This one, that's kind of your message. That's telling you the selling has stopped. You can still buy this one on positive trading. There's your fry pan bottom breakout. You could be buying this one. What is that all about, Mike? Yeah, that's another way to do it. If you've got something that looks a little bit strange, what will we, ET? If it's got an odd candle or it's not coinciding, flip to an intraday chart and see what might have happened. That would probably be more accurate. All right, so we're still sitting in a market condition where you've got some very strong bullish charts because the NASDAQ is heading higher, and you've got some potential bearish charts because the Dow-related stocks are still weak. So with that, well, we're done in about near time. We'll see everybody bright and early tomorrow morning. We'll see you then.